Okay, I wanted to go over the problem for chapter 1. And there are some tricky things to it. So I'll take a look and give you guys credit if you got a couple things wrong, because I was surprised, honestly, of some of the items in this problem. But let's go ahead and go over it. And if you have any questions, let me know. So what it wants to do first is a regular income statement with this piano company. So this is normally what you'd see in financial accounting as opposed to managerial. So the first thing we're going to do is obviously sales is the first thing you see on an income statement. And for this particular one, they sold 60 pianos. The last time I brought this up, it said 57. So I don't know if you had 60 or 57, but either way, whatever you get, just realize that we're going to do some different things. So if we sold 60 pianos and the average price of each piano was $3,200, then we're going to do 3,200 times 60. So our income for this month was $192,000. Oops, not 19, 192. The next thing we're going to do is we're going to take out the cost of goods sold. So that's the next item on the category. And here it says that the average cost for each piano is $14.98. So we're going to take $14.98 and multiply that by 60. So our cost of goods sold is $89,880. So 89,880. So then our gross margin is going to be our total income of $192,000 minus our cost of goods sold, $89,880. So 102, 120, 102, 120. Okay. So then the next part of this is going to be our selling and administrative expenses. And they laid this out for us up here. So advertising, let's see if I can keep it all on the same page. Advertising was $956 per month. Sales, salaries and commission. So this one we're going to do a little calculation because it says 6% of sales plus a flat fee of $47.86. So let's do our total sales, 192 times 0.06. So for the commission, it's going to be 11,520, and write that number down because you will need that later. Bring it down. Okay. Plus the 47.86. So 16,306. Okay. The delivery of pianos to customers is $62 per piano sold. So I'm just going to do 62 times the 60 that we sold. So our delivery, I guess I got to scoot it down a little bit. Our delivery was, what did I say was? $37.20. Okay. The next item on here is utilities. Okay, and that's going to be $640 per month. The next one is depreciation of sales facilities, and that's 5056. Okay, so that looks like all of our selling and administrative expenses, and it was nice enough to add those up for us. So then let's talk about our administrative expenses. So the first one that we're going to have is executive salaries, and I don't think I'm going to be able to keep this one on the same page. That's kind of a bummer. So we have executive salaries, and that one was $13,503 a month. $13,503. The next administrative expense was insurance, and that's $696 a month. Insurance, $696. Our next expense was clerical. So clerical is $42 per piano sold. So I'm going to do 42 times 60. And I'm going to add the flat clerical 2505. So our clerical for this month was $5,025. Put that down before I forget. And that goes under clerical. All right. And then finally, we have depreciation of office equipment, and that is $855. And I totally forgot that number. It was $855. Okay. So our total administrative expenses are $20,079. Our total expenses are $46,757. So if our gross margin is 102, 120, and we have an additional 46,757 in expenses, we are going to have income in this case, net operating income. And that's going to be our gross margin, our 102, 120 minus our other expenses. So we're looking at operating income this month of 55,363. Okay. Now, that one I think is pretty straightforward. Let's talk about the second one. So we're going to look at variable and fixed expenses. And what I want you to think about in this case is if you were to make, in this case we're making pianos, if you were to make 0 pianos this month, the variable expenses would be 0. So those items that are 0, if you made no pianos, are going to go under your variable expenses. And this gets a little tricky, and it's different for every company. And I'm going to tell you which ones I think could possibly be negotiated each way. So let's start with our regular expenses. So advertising, advertising is not going to be a variable expense. Regardless of how many pianos you sell, you are still being charged that $956 in advertising. So let's go ahead and put that under fixed expenses. Advertising. And again, I forgot how much it was. It was $956. $956. Okay, so let's look at our next expense. And that one is sales salaries and sales commission. Now this one is a little bit tricky because what we're dealing with is it looks like your sales staff gets a salary of $47.86 regardless of how many pianos are sold, plus there's a 6% commission. So we're going to have to split this. So what I'm going to do is under fixed, I'm going to put the $47.86. Oops. If I can get there. It's not moving down for me, I'm sorry. It looks like my computer is frozen. Okay, we are good now. So I'm going to do sales salaries, and that's that flat amount of $47.86. And then under variable, I'm going to put the commission. So that part is a little bit tricky. And that was 6% of our total sales. And our total sales was $192,000. So I'm just going to take 192.06. And I said to write that down, didn't I? And that's 11,520. Oops, 11,520. Now it wants to know how much it was per piano. So if I take this 11,520 and I divide it by the 60 pianos that we sold, it's 192. Okay. So then our next expense is the delivery of pianos to customers. Obviously, that's going to be a variable expense. You're not going to have that charge if you sold 0 pianos. So let me put that down, delivery of pianos. And that is, we know that that's going to be 62 a month because that's, or 62 a piano because that's what it told us. So I'm just going to take that 62 times the 60 that we sold, and that's going to be that 37.20. All right, so the next one is utilities. And I want to talk about this one for a second, if I can even type it in. So utilities, in this case, is going to be a fixed expense. the funny thing is that this can be considered what's called a mixed expense. So if you think about it like this, if you make no pianos, you're going to have a base utility cost just to keep the place heated or lighted or whatever. But the more people that are in there working, maybe the longer hours that they're working, the more utilities you're going to have. And so this is one of those, and I think as you maybe progress to cost accounting or some of the others, accounting classes, you'll find that this is not necessarily a fixed expense in all cases. It can be a mixed expense. So just kind of keep that in the back of your mind. The next one is going to be depreciation of sales facilities. That's going to be a fixed expense. So no matter what or how many pianos you're making, you're still going to have to depreciate your stuff. And the next one is going to be executive salaries. That's a fixed expense as well. They don't get a bonus based on what the sales were. The next one is going to be insurance. Fixed expense. No matter how much you sell, you're still going to have the same amount of insurance for the month. That was $696. Now the next one is clerical. And again, what they said was that there was a flat fee and then it was an additional $42 per piano. So what I'm going to do is I'm going to put clerical here and I'm going to put that flat expense that they had of $25.05. And then up in variable, I'm going to put clerical as well. And I'm going to take what they said was the $42 per piano and I'm going to multiply that by how many we sold of 60. So that's $25.20. And obviously that's going to be $42 per piano. And then depreciation of office equipment also is going to be fixed expense. And this was $855. Okay, so we have all of our fixed and all of our variable expenses. Now, all right, I also need to add my cost of goods sold in here. So let me go ahead and do that. Oh, cost of goods sold. My cost of goods sold was $89,880. So $89,880, and I'm going to also divide that by the 60 pianos that I sold. $89,880 divided by 60. So per piano, $14.98. Okay. Is that right? Yeah. Okay. So our contribution margin, very important. Our contribution margin is what's left over after the cost of all of our costs to make this stuff are taken out. So I'm going to take our total sales, which was 192, and I'm going to subtract all my variable expenses. So the 192 minus all of our variable expenses. So these are expenses that we incurred only because we made these pianos. So it's minus 107,640. So my contribution margin is 84,360. 84,360. So let me talk about what that means. That means that I have $84,360 left over to pay for my fixed expenses. Anything left over after my fixed expenses from this amount goes to profit. So this is really crucial in figuring out what your break-even point is. Okay, so let's figure out what it is per piano. So 1794 divided by the 60 that we sold, so 29.90 is, or $30 is our cost per piano. So this basically is the homework problem. I think it's pretty tricky. One of the most important things to understand though, and especially this contribution margin. So again, if you have any questions, let me know. Thanks.